today we're actually going to move from the theory and concepts to practice and see how actually the carbon finance projects are actually structured and delivered on the ground. This topic is actually important now because agricultural carbon markets are gaining real momentum, but they still remain complex. And this is why we saw the need from our members to do this training and learning series. There are many things that like pricing variability, methodological choices, and benefit sharing that are not abstract issues, but they actually determine whether smallholder farmers can actually benefit from this. And this topic is really important for public development banks because public development banks do sit at the intersection of these challenges. They're still close enough to the farmers to understand the local context and realities on the ground, but also structured enough to mobilize and de-risk the capital. Yeah, so we just wanted to advocate again that PDBs are uniquely positioned to bridge this international carbon finance and the local agricultural reality, thanks to their public mandate that also allows them to embed the equity and benefit sharing safeguards that purely private sectors may not prioritize. And as today's session's objectives, we're going to hear concrete hands-on experience from different institutions that have designed and financed real projects. We're also going to understand like the different operational challenges, such as pricing, ownership, and the benefit sharing in practice, and also how to move from just theory ideas to pilot projects to scale. And we want to leave you with some practical takeaways so that the AgriPDB platform members can actually apply this in their own institutions. So now I'll actually pass the floor as well to Ivano from the FAO FAST Partnership for a brief recap of the key takeaways from the first webinar in the series before we turn to today's implementation focused discussion. And thank you so much everyone again for joining, and we hope you enjoy it.
Hello, everyone. Thank you, Jimena. Thank you, Thierry, for this introduction. Welcome, everybody, to this webinar. It's an honor from us, from FAO, from the Climate Change, Biodiversity and Environment, to be invited and to speak during those events, to share our experiences, to make sure that people across different entities and level of maturity and knowledge know and understand carbon market mechanisms, because that will be an essential and fundamental element of both reducing barriers, but also in understanding what are the risks, what are the opportunities, obviously linking to what Jimena has just introduced. I will have a quick introduction of about 6 minutes, just to explain briefly what has been discussed in the previous webinars, some updates from Bonn, from the SB 64 on Article 6, how this relates to agri-PDBs, and some key takeaways. And I'll be then happy to answer any questions or comments afterwards. I'm the technical lead for the carbon markets Article 6 within the Climate Change Department, and we lead all of the country level support related to carbon markets, and specific to Article 6, of course. When it comes to understanding what is the challenge, and now from an FAO also positioning, but also from agri-PDB's perspective, we can address together this challenge. You can quickly understand how big this transition needs to be and what steps are necessary to actually increase the level of investments, climate finance towards, at least from our perspective, of course, to agri-food systems. Knowing that only a small percentage goes to agri-food systems, and there is a huge gap, although the emission source from agri-foods are the second biggest in the world. And this is just some of the elements, without even counting the fact that we are talking about food security, food production, resiliency, so both from a mitigation and adaptation perspective. And now NDC can play a role here, because when we talk about NDC, most people don't know that Article 6 plays a huge role to increase the ambition level of countries. and how NDCs are being developed, structured to address Article 6, both from a buyer perspective for buyer countries to meet their NDC, but also at the same time from an host country perspective, whether the country has the potential to sell any ITMOs, international transfer mitigation outcomes, so carbon credits, to actually attract climate finance toward their adaptation plans and mitigation measures in the country. And this is where carbon markets is one of the solutions. Obviously, it's not the only one. We try to address this from a nested finance approach that is crucial, but also our non-market mechanisms can help the transitioning and supporting the architecture that is necessary. This is very important. That is necessary to build the infrastructure that countries need to develop projects with high integrity. And when it comes to developments from bond, I will try to be quick here. We have seen that Article 6 is moving from negotiation to implementation. Obviously, also negotiation plays a huge role there, but countries are discussing about capacity building, developing registries, their governance. So there is a shift that is happening towards implementation steps, establishing DNAs, and developing those institutional arrangements that will be necessary to ensure this integrity process that we've been discussing also in other webinars. And that is the essential to ensure not just environmental integrity that you can address through MRV systems, and obviously knowledge about how do those projects need to be developed to ensure that integrity, but also to show even through initial pilot projects how farmers can adapt those measures to overcome even social barriers, because let's not forget about small farmer fragmentation, for example. How do we address that through project development so that farmers gain the knowledge, gain also the tools, but also the ways for them to see and test that this actually ensures productivity is maintained, or that there are measures to ensure that any loss of productivity in the first years to adopt the new measures will be compensated even through non-market approaches. And this is where also other climate finance instruments can come in together with carbon marketing mechanisms. And of course, capacity building, which remains a huge challenge, which we are trying to address also thanks to Agri-PDB, to IFAD for this for those webinar series to help address also those gaps. Why does this matter for agri-food systems and PDBs? Because obviously, as we have seen from the data, agri-food systems are central, not just from a GHG emission perspective in terms of impact, but also to ensure food security. And this is where FAO is trying to play a role. We are positioning ourselves to ensure this integrity in the process, so that we, together with Agri-PDBs, together with the financial institutions, together with the private sector, to ensure that any knowledge that is given and provided to government level, which are our counterparts, are being provided also together with MRV tools, for example, which we have built open source and as public good, that can be used in conjunction with the private sector so that they can monitor and link with the knowledge that is necessary the long-term sustainability of those projects. And obviously, as part of the bigger picture, the PDBs have a huge fundamental role here, because as also Jimena mentioned, it acts as a de-risk climate partner. It acts as an aggregator. It mobilizes private capital, and it helps in the scalability element. Last but not least, and I'll close and then hand over here. Three main takeaway that I can provide you from what we've been discussing in the last webinar, what has been happening in negotiations in bond related to Article 6, is that readiness will be fundamental to ensure that the infrastructure, the architecture that is necessary to develop projects with the environmental and social integrity is necessary. Otherwise, that will become a burden, that will become a huge risk, and it will become even a barrier even to develop projects. And that is obviously related where integrity creates credibility in the market to avoid the issues that we've been having in the voluntary carbon market in the past. But we don't want to stop the process. We want to ensure that any lessons learned from the past that they actually get addressed through new solutions, through innovation, and then partnerships. And this is where our roles together as a team, integrating all of the elements which are necessary to create the enabling environment that are necessary for governments to take informed decisions, but also to ensure that those investments reach the farmers, that there is a farmer-centeredness approach, so that those projects are developed with high integrity carbon market principles. And then I stop here and I pass over back to Jimena so that we can continue with the presentation. Thank you all. Over back to you.
Thank you so much, Ivano, for this. Now I would also like to give the floor to Alain, who is also joining us from CIRAD. We'll take
Thank
over.
you, Jimena. Hello, colleagues. I'm going to share my screen right now. It is there. Okay, and we'll use this one and put it in full screen. Okay, I'm going to speak about forest carbon markets, but because there is a kind of maturity with forest carbon credits, and it is only emerging with agriculture. But I think the lessons we know from forestry can be extremely useful for agriculture. I think the issues are more or less the same, maybe more acute with agriculture, specifically with respect to the issue of non-permanence. But it will be interesting to discuss this. Also, I would like to introduce the issue of sovereign carbon credits, which is in many countries, especially in Africa, a very hot issue because many projects cannot sell their carbon credits. For instance, I was speaking yesterday with a project in Mozambique where they have issued some carbon credits, but as the government is claiming the ownership of all the carbon credits, it has been impossible to trade these carbon credits for now. So many, as you know, many carbon credits market have high expectation developing countries, but for forest conservation management, afforestation, now also for agriculture. But it is important first to understand that the mere fact that a country or a community has forest or carbon store in the soil on its territories is absolutely not a guarantee that it will be able to trade any carbon credits and to issue any carbon credits. You need to do more. You cannot be paid globally, with some exception we are going to see for a stock of carbon for the carbon stored in the soil or in the trees. It is not sufficient. There is a big issue about what we call environmental integrity, which you have to demonstrate to issue to offset emission, to neutralize all the emission that is been are emitted by a corporate or by a country. The demonstration of additionality is a necessary condition, but it's very difficult to demonstrate or verify. And most of the issues are also in the energy sector, but also in forestry and agriculture, are related to additionality, demonstration of additionality. It is important to understand also that CO2 is a stable molecule in the atmosphere. to remove from the atmosphere, CO2 have to be absorbed by a sink, a carbon sink, can be a forest, can be soils, can be a wetland, which are going to remove from the atmosphere and store it in carbon reservoir. Biomass or soil. And the big difficulty is that according to the IPCC, and the science simply, the residence time of CO2 in the atmosphere is multiple. And a significant fraction, 15 to 40%, is going to remain in the atmosphere for many centuries and over 1,000 years. You have on the right side of the slide, you have some, you have an excerpt from IPCC. And so what is the consequence if you want really to have integrity to offset anthropogenic emissions? You need additional storage with anthropogenic sinks to balance the emission over a very long period. And it's a problem that is very difficult to overcome through forestry or agricultural activities. There is also additionality, non-permanence, and the risk of leakage exists at various geographical scales and cannot be resolved without controlling global demand for land and for products derived from land conservation. Simply said, if you protect a forest or an area and you don't address the issue of land demand for doing palm oil, for instance, you simply are going to deplace the pressure of deforestation of land conversion, and you are not going to resolve any climate issue. We have also to distinguish between cap and trade markets and project-based mechanism. It is very important. There is a lot of confusion in that area because you have cap and trade systems which are based on rationing and use allowances or quotas, emission permits. It is a system which is well known in the European Union, but also in many countries. The one of the European Union is probably the most mature. And you have, on the other hand, you have project-based mechanisms which has no emission cap, but use baselines, which are scenarios, which are counterfactual scenarios of what would happen without a project, and generate credits. And credits and quotas are not the same. And there is a lot of confusion, and they don't have the same price also. And depending on the rules adopted by different jurisdictions, by the state, credits may or may not be used, and only to a certain extent as emission permits. So you have some bridges between both credits and quota, but it is a political decision to allow corporates, for instance, or to allow countries to use some credits which are generated by project generally as quota, which are generally more at a jurisdictional level. You have different cases. You may have for credits. For credits, you can have absolute reduction that must be attributed to action, projects, or policies and measures at national jurisdictional level. The idea is that the past predicts the future business as usual emissions, and it's not a proof of additionality. Probably it's compared to the other case, which is a relative reduction, which is at the center of the figure, which is avoided, for instance, deforestation, avoided conversion. It's the reference scenario there is a prediction, a counterfactual scenario that cannot be verified ex ante and can maybe ex post is possible, but it will be delayed. It's something we know with RED Plus activity. There are a lot of discussion to see. It's not totally clear whether it will be allowed or not within Article 6. And you have also it's important for agriculture, the absorption increase in stock. It may result from plantation or enhanced conservation of maybe agricultural practices that increase the carbon storage, but it must be attributed to measurable action of policies in any case. Price are different, I said. Quota and credit do not have the same value. here you have yesterday had a look on the prices. Prices on the quota in the European Union, you have it's almost 80 euros. In the UK, there is also a cap and trade system. It is around 60 US dollars. You can see what is the price in Australia, in South Korea, in China. In China, you have also limited but sectoral cap and trade system, not a global one, not a full one, but with very low prices of carbon, if you can see. And prices of credits in voluntary market. For instance, you can see, according to this source, that some offset have enjoy only a very low price. Okay, it's a global, it's an average price because why? It is because you have what we call vintage credits. You have very on the market. You have very old credits that has been generated some years ago, so maybe some 20 years ago sometimes, and very difficult to sell, and so you can be sold only at a very discount price. Generally, you have for also for no vintage for more recent credits. You have, for instance, for Red Plus, you have prices which are around 5, 4, 6, or 7, or maybe more. For instance, if you for mangrove, you may have prices around 30 US dollar, for instance, is more interesting, depending of the perception of the quality of the credits and of the co-benefits of the credit. When you have some biodiversity co-benefits, you can attract more higher prices. But in any case, it's very important to understand that you have millions, dozens of millions of carbon credits that are unsold, that has been generated by project and without possibility to trade, because there is not enough demand and there is an oversupply of carbon credits generally. And probably it is structural, that is because there is no cap, there is no rationing. It is a market with oversupply, which is chronic, which is really structural, which is very different from quota. Quota, there is a rationing that is going to be tightened over time, and so the prices are higher. We had already an experience in forestry with the clean development mechanism. Globally, it has not been successful because only very few number of forestry projects were eligible to the CDM. The CDM, because the big issue was the issue not only of additionality but the issue of leakage. It is why conservation project has not been allowed, accepted within the CDM framework, because of the risk of leakage. You protect a forest in one place, but you just displace the pressure elsewhere. And it will be with Article 6, which is going to take over, which is taking over the CDM. CDM now is no more in force. Probably the condition will be less restrictive, but it will be. We will see how this issue of leakage and this issue of additionality we are going to be addressed by the new rules of Article 6. But it was very very tough within the CDM. Probably Article 6 will be more flexible. Red Plus initiative has been specially for forest. I will go very quickly because it's not something of interest for you for agriculture. Probably Red Plus is going to be largely integrated into a new market, 6.2 and 6.4. Red Plus were supposed to be initially a system mostly funded by carbon credits. In reality, in fact, Red Plus has been essentially driven by public finance, and especially Norway primarily brings the bulk of the funding for Red Plus. The Red Plus project is different. You have a Red Plus was supposed to be not about projects, but it was supposed to be at jurisdictional level, national level first, and only what means that only countries or jurisdiction can emit carbon credits, Red Plus carbon credits. But you have also a voluntary market that that emerged. Why? Because the legal framework for RED Plus was unsatisfactory for carbon investor and NGOs because they could not be allowed to trade to sell directly the credits, and private governance emerged with private certification standards. It was interesting for forestry because he has funded a lot of forestry projects, but there are a lot of questions about the environmental integrity of the credit issued because the doubtful additionality linked to the construction of reference scenario, the risk of offset leakage, and the solution that has been put on the table to address the issue of non-permanence are quite interesting intellectually, but in fact, actually, they are not. They cannot guarantee the non-permanence over a very long time period. It is a pooled credit reserve, but it is a system which is probably non-sufficient. And you have also some criticism regarding land grabbing, exclusion of community, particularly when protected areas are taken over through carbon finance. Uh, I'm not going to speak about the new international compliance market because my colleague my FAO colleague did just spoke about this some minutes. There is this issue of corresponding adjustment, which is an issue for many countries because countries have to decide whether they transfer the national results or if they keep on the territory within the nation the result in terms of quota, in terms of credits, if you want, to reach the climate objective, climate targets. So because if they sell abroad their carbon credits, they cannot use them for their national results. So there is an issue of reputation, credibility also. We don't know exactly how for the 6.2 is transfer of national results. The issue of the principle of additionality is mentioned, but in fact it is contradicted by the de facto abandonment of additionality in relation to NDC commitments. The initial idea was, okay, you can sell your carbon credits, your results, only if you have fulfilled your NDC. So you can only transfer abroad results beyond additional unconditional climate targets. It has been abandoned, in fact, de facto. And there are also other points which will be interesting to discuss. I don't want to not want to insist on this. I want just to put my last slide because I'm running out of time. There is a big issue about the ownership of carbon credits. There is a big discussion, especially in Africa, but probably also in other countries, about sovereign carbon credits. And in fact, there is no clarity about what means sovereign carbon credits. For instance, in Gabon, the idea for the previous government was only all the carbon credits should belong to the state, and the projects are not allowed to trade to issue any carbon credits. So it was one way. There is also another possibility is to say, okay, sovereignty means that projects can issue carbon credits, but they cannot sell on the international market carbon credits. Only the state can be the owner, can be the only buyer and reseller of certified credit generated by project. It is another version, if you know, of sovereignty. And there is also the nested approach. Nested approach is why there is a sharing. There is a sharing of carbon credits between the projects. Project will be the first beneficiaries, but if you have within a national result, if you have carbon credit in excess, not attributable to any project, it will be for the state, for the government. So it was a way of discussing about the sovereignty. You can have also simply one solution, which is now contemplated by many countries, to say, okay, we leave we leave the carbon credits, so with the project can trade carbon credits abroad, but we are going to make a tax. We are going to take 20% of the cash flow, for instance, of the cash flow of the net benefit. It's not very clear in many countries. And also you may have also another solution that credits may only be government can decide that credits cannot be sold internationally, but can be used only within the national territory for national cap and trade system, for instance. If you, I will leave you will have my slides, but you have this different possibility, different cases that I have framed here with nationalization of sovereign carbon credits, with exclusive sovereign credits, which exclusivity, necessity approach, laissez-faire and share, etc., different possibility. Sorry, it has been a little has been long, but it's important. Yes, my very last slide. It's important to understand that this have some consequences, concrete consequences. For instance, in Kenya recently, the government refused to sign a letter of authorization for the 15 million carbon credits from a company named Coco Networks, which is promoting bioethanol stoves, and because the government said that we do not allow Coco Networks to transfer credits that has been generated abroad in foreign countries. And the company went bankrupt due to insufficient market opportunities and prices in the voluntary market. So it was Article 6. In the Article 6, the government has need to give an authorization for the transfer abroad of carbon credits because of the rule of corresponding adjustment. And so it may have very concrete consequences because you might have a competition between private entrepreneurs who are going to produce carbon credits and want to sell them abroad on the voluntary on the Article 6, sorry, not voluntary, Article 6 market, and the government that could consider that if the bulk of carbon credits are sold by private companies, they will not themselves be allowed to sell carbon credits. Kenya, for instance, will not be in capacity to sell carbon credits abroad because the bulk of the most of the carbon credit would have been sold by a company like Coco Networks. So you can see the consequences of the issue of sovereignty, of the issue, this discussion of the ownership of carbon credits is a very big and mounting issue. Thank you very much.
Merci beaucoup. Thank you so much, Alain. I would now like to give the floor to Monsieur Gauthier from Mirova. He's going to talk a bit more about the structuring, the carbon credit projects, and the experience that they've had with different development finance institutions. Merci, Gauthier.
Si, bonjour, hello everyone. I hope you can see my screen. Does it work?
Yes, we can.
Okay, so yeah, I'll share a few insights about investing in carbon projects in agriculture in emerging markets, and I work for Mirova. So maybe in a very rapid introduction, Mirova is a fund management company, so specializing in impact investing. We are a B Corp and mission-driven company, and have been able to raise close to $40 billion for the past 12 years for sustainable investments. And we are part of Group BPCE, which is the second largest banking group in France. And I'm in charge of the natural capital department that has specialized in supporting two types of projects, either pure nature regeneration and protection projects related to mangroves, peatlands, forest conservation, and so on, and also productive project for sustainable timber, food production with regenerative agriculture, agroforestry, and other sustainable practices. And in this specific field of natural capital investment, of nature, we could raise more than $1 billion from a mix of public and private investors. And it means that with especially blended finance structure, we can work with development finance institutions, with governments, to unlock more funding from either corporate investors or insurance companies, pension funds that are willing to diversify their portfolios and invest in impact topics. And for the past 10 years, we've supported more than 70 projects, and I've been working in coalitions with civil society organizations, with the UN and other bodies, and received a few awards. And so when it comes to carbon finance projects, Alain already presented the types of projects and the activities that are supported. In nature, there are mostly emission avoidance projects, mostly with REDD+, and then carbon removal with reforestation, afforestation, and also agricultural projects. We are at Mirova mostly active for the time being in the voluntary markets that was described beforehand, where there's, for the moment, the greatest share of liquidity and investments, especially under standards such as Vera, Gold Standard, but there are others that are emerging, and there is especially a convergence in terms of good practices, and especially the so-called core carbon principle were adopted by a body called ICVCM that provide more safeguards in this voluntary carbon markets to ensure higher integrity, even if it's a really continuous improvement. And of course, there are Article 6 Paris Agreement crediting mechanism and more regulated markets, but we are seeing one more convergence, even if there are some challenges that Alain described very well. So it's the interoperability is something that is pushed by the market, but that is still a bit of a challenge. Still, there is a voluntary market that is pretty dynamic with supply of project, demand of credits coming from corporates, and a vast ecosystem of players from project originator, developers, verifiers, marketplaces, buyers, rating agencies, financing, and so on. That is very dynamic and and is growing, especially with more and more forward transaction and offtake agreements, and this market size is assessed at more than $12,000 billion, yes. $12 billion for the past year. So it's growing, and price forecasts are pretty bullish because on the one hand there is limited supply of credit because underlying projects are complicated, but in the face of this there is high demand, especially coming from companies committed to net zero, with SBTi requiring them to neutralize their residual emissions. So just in terms of market context, pretty dynamic market. And in this context, we're seeing much more structured transaction coming in. And actually, we are seeing 4 types of transaction with carbon credits as underlying assets that are being developed in the market. One is pre-purchase agreements of carbon credits. It's where a fund, a bank, or a company pays upfront for a certain amount of carbon credits to be received in the future, and it's a way to finance the project upfront. So it's for paying the implementation on the ground and also all the validation and registration process under Vera and other standards. There are also similar transaction called streaming agreement, which is also a prepayment upfront that can finance the project, and then the entity that has prepaid will have a percentage of the credits generated. So it can be upwards or downwards in terms of volume, but it's a way to share the risk, and it's a way to get access to funding also for project developers. And then there are more traditional transaction offtake agreements, which consist in providing a commitment on volume and price and purchase price in the future that can unlock more financing, but it's only a commitment to buy in the future, no upfront payment. And then there are spot transactions about really exchanging credits that are already issued and where they can be sold and bought by a counterparty. And all of this transaction has really gained in terms of maturity in the market that has led to a much more structured market. And in terms of project financing, this is something that was outlined in the beginning. It's important to take into account the risk profile over time for a given project. And when it comes to project start, when basically the underlying project is just an idea, the risk is high, and the ability to finance the project is often difficult. It's usually the project developer itself that provides the upfront equity. It's often in kind, or what we call sweat equity work. Then we're seeing when the projects become more solid, is more designed, is well prepared, there are more funding coming in from investment fund or from this carbon streaming or carbon prepayment that I was referring to, where people are able to finance the implementations when the project is designed. And when the project is verified by the standard and is implemented, then there are more and more funding available. And in the future, there are, as credits are generated, there is more and more funding that is available because it's less risky. And what we have seen a lot is project finance techniques being applied to these types of transaction. And so it's about creating what we call a special purpose vehicle that, sorry, can you still see my screen? Yes. There is a special purpose vehicle. So, sorry, I don't see my screen anymore myself. Let me do it again. Sorry, 1 second, because I think I touched on the wrong button. All right, and this will come back. There are, so transactions that are really similar to what we've seen in renewable energy finance, for instance, where there is a special purpose vehicle that signs contract with verifiers, with law firms, with local operators, and there is a prepayment, and then the credits are delivered to the corporates or to the in-kind carbon fund that have put the upfront funding. But because the market is now turning more and more to also off-take agreements, future commitments to buy the credits, we are seeing pure financial players coming in. So banks, development banks, many types of investors that are able to invest in the given project, finance the given project. The project generate credits that are sold on the market either through off-take agreement or even spot transaction that generate cash flows that can repay the financing. And so we are really seeing the market evolving towards a fully fledged project finance techniques. And actually, there are very good references and playbooks from Cross-Boundary that has issued a few publication and even online trainings that are very good and really adapted to carbon activities. So which the links will be shared in the presentation. And so all of these techniques, and just to conclude, we have put them in place into very concrete projects on the ground that are up and running, and this is what we have financed over the past years. That includes, for instance, a community-based agroforestry program in Madagascar with a project developer called Teraka, and it's a methodology under Vera VM0047, and also applying a so-called TIST methodology that is a community-led methodology with subsistence farmers that are trained and supported to implement these types of projects. Here we're speaking of a €2 million investment, so it's becoming sizable, but remain a bit small because we are seeing the market growing with more and more transaction. We have signed a much bigger transaction in India with implementation of regenerative agriculture and using a Vera methodology VM0042 for improved agricultural land management. And here it's a project developer, Varaha, working itself with a lot of local NGOs in India to apply regenerative agriculture practices. And here we're speaking of a €26 million investment, so it's becoming sizable. And another example is restoring degraded pastures and implementing rotational grazing and reforestation in Costa Rica. Another 20 million investment. And last but not least, maybe a last example I wanted to share is a transaction that we made in South Africa in restoring degraded agricultural land with a project developer called Imperative. Actually, it's the first round has been $31 million investment with a Vera methodology. And recently, actually, the World Bank came in with a so-called additional outcome bond that has provided funding to the project with a syndication and a structuring made with BNP Paribas, and that has been able to attract even more investors, thanks also to a guarantee provided by World Bank. So just to mention that there are more and more structured finance, implying development finance institutions that are able to play a catalytic effect and mobilize much more funding because the market is growing. But of course, sensitive topics include regulation that Alain mentioned, and an important one is really the profit sharing and the ensuring that there is good alignment of interest from the corporate off-taker to the local farmers on the ground, and that the value is also shared equally, and that's really significant area of attention.
Thank you so much, Gauthier. And it's a good transition because now we also have Mr. Aftab, from a representative from NABARD, which will also tell us more about NABARD's experience with carbon credit projects and the carbon credit fund that they have just established. So please, merci. I think you're muted.
Oh, sorry. Okay. Is the screen visible now?
Yes, perfect.
Yeah. So thank you to the team for the invitation. So I'm Aftab Kaidi. I'm working as an assistant manager at National Bank for Agriculture and Rural Development, which is the largest developmental financial institution in the country. And we have recently, as alluded to earlier by Imena, that we have released a carbon fund, which is going to be focusing on providing debt financing and also some grant assistance for the development of carbon projects. So without wasting any more time, I wanted to just begin with the presentation. And the topic for this presentation is mostly going to be focusing on what are the project design operations, then the operational setup of a carbon project, what are the critical field challenges, and what the lessons that the project developer has learned while designing these particular carbon projects. So in the case of the project design, so first of all, every carbon project, it requires that it needs to be proved that there is some additionality. And this is going to be done by providing a proper baseline study as well. And also providing a defensible without project scenario. So it can also include quantities, especially for the leakage, and also some buffer requirements. Apart from that, there is the alignment with the methodology. So as we all know, there are several voluntary carbon markets, and each of them have a different set of methodology depending on the particular activity. Apart from that, there is a rigid carbon and metric modeling involved in the whole project design as well. So this can include anything from the GHG emissions and calculation of how much of the biochar is being produced, at what percentage of the biochar is going to be converted into stable form of organic carbon, so H2C organic ratio and such things. Apart from that, there are also the operational setup involved in any carbon project. So small landholder farmers is one of the major, what we can say, a particular detail that is faced in the Indian carbon market. So the average land holding here is somewhere around zero point 0.9 hectares per farmer, which is very small and is not really viable when it comes to development of any carbon project. So there is a need of the aggregation of farmers. Apart from that, there is also the requirement of the quality data infrastructure that needs to be in place. So this will help in ensuring that there is integrity and credibility to the carbon markets, carbon projects. Also, there is the need of the auditor or the VVBs, which are basically the validation and verification bodies that are empaneled by the various registries for the scrutiny and management of the project. Then some of the critical field challenges faced by the project developers include the complex sourcing and legal verification that are required when it comes to the implementation of a carbon project. Then there is the need of the benefit sharing or the equity tensions that are going to be faced by the carbon developer when designing any project that involves large number of small landholder farmers. Then the extended development cycle, as we all know that there is a long span between the listing of a project to the registration and the issuance of the credit, and then comes the retirement of the credit as well. Then there is the issue of methodology design. As we all know that under Vera, let's take an example of Vera because it is one of the largest nature-based solution provider for the carbon projects. So under Vera, there was the ACM 0003 methodology, which was being used as a legacy methodology from the CDM days. And after the transition to BN 0047, the projects which were earlier registered under the ACM methodology have lost nearly all of their value. So this is some of the important things that need to be taken care of while implementing and executing a project in carbon market. Then what are the lessons learned when considering carbon market as a whole is that there is a need of core communication and de-jargonizing of the project when it comes to dealing with the community of farmers, which usually prefer communication in their regional language. So the implementing agency and the carbon project developer need to understand this and take steps to ensure that there is good outreach with the community as a whole. Then the financial transparency when it comes to the finances of a project, say for example, what is the IRR, the DESRA, and other financial ratios. It is important that there is a holistic and a radial view taken for the financials of the project for making it more acceptable to the public as well. And also the pragmatic field compromise that comes when we take into consideration the various challenges when faced in the carbon market. As alluded to earlier, that there is an extended timeline when it comes to the issuance of the credit, and this means that there needs to be a management of the local expectations. So the farmers who are going to be involved in this project need to understand that the amount that they will be receiving as a benefit of the carbon credit is going to be a very mere amount considering the amount of area from their side that is being contributed into the carbon project. And so it requires some amount of uh, managing of the local expectations in this case. So let's transition to the core of what our discussion should be. It's going to be surrounding around what are the learnings for the ARR, ALM, and biochar projects. So apart from the aspects covered in the earlier slide, which was taking the umbrella view of the whole carbon projects basket, this is what is additionally required when it comes to the afforestation, reforestation, and revegetation projects. So for example, in the project design, one needs to understand that there needs to be a degraded land stratification, a proper mapping of the whole area in understanding how the baseline can be formed. Then again, on the lines of the Vera example, there should be a standard specific selection. So a project developer needs to decide when going for any project, which registry would he prefer to go for. And basis that he can select what sort of standard and the methodology he would like to opt for. Apart from that, in the operational setup, there is the plantation layout, and especially in the region of the Northeast, where some of the projects we have referred to for this case study, they prefer to go for silviculture as a form of intercropping practices. So this helps them in ensuring that there is some reduction in the appetite of the farmer for the credit, which otherwise would come to them with a very long time lag. Then the issue of rain synchronization. As we all know that India or most of the Southeast Asia is highly dependent on the monsoon rains. So this the plantation and the planting activity needs to be synchronized with the rainfall season. Apart from that, one of the issue that is generally faced in afforestation projects in India is the undocumented land tenure. So there is a special case for land management in India, Most of the projects that we are dealing with are usually under the tribal occupation, and there is no proper documentation when it comes to the land that is going to be involved. And so that poses a certain challenge to the project developer. And one of the major lesson that we need to understand here is that we have to prefer livelihood over the carbon. What this really means is the selection of the crop should be on the basis of what the farmer wants to do on a long term basis. Obviously, there will be some revenue generated from the carbon credit, but it can't be done as the sole revenue. It's going to be a minor component in the overall economy of that particular region. Similarly, in case of the agriculture land management, which usually includes the alternate wetting and drying of rice sort of projects, so it's an important need for understanding baselining as well as methane reduction architecture that is going to be involved in the AM projects. Then there is the need of MRV infrastructure. So when it comes to the small landholders, providing a digital monitoring, reporting, and verification infrastructure is going to be quite essential for bringing down the overall cost of the implementation of a carbon project. So the biggest challenge faced in this project is again the fragmented boundaries. So the agricultural land is not a contiguous parcel of land. It is broken down into smaller parcels. So that poses a very big challenge when it comes to monitoring as well. So the lesson that is learned from implementation of one of the AWD project was that there needs to be some integration with the traditional practices, because the practice needs the approval of the community as a whole. So moving on to the next, the biochar one, it's one of the type of project that every banker loves to finance, and there is a good reason for that. So what we are getting out of a biochar project is something that is uh, well engineered. There are tangible assets. There is a security attached to all the assets, and obviously there is the price component, as the biochar projects usually tend to get a higher amount of carbon credit value as compared to the other nature-based solutions. But again, there are certain things that need to be taken care of when designing the biochar project. What are the operational things that need to be taken care of, the challenges faced, and also the lesson that we can learn from execution of a biochar project is that there is some consonance in understanding that there is a need of not just depending on the carbon aspect of the biochar project, but also the alternative use that can be made from the biochar itself. So this can be in form of utilization of biochar as a material for construction of a road, asphalt road. So that is another form of income or revenue that a biochar project can uh, get into. So coming to the NABARD's perspective, financial institutions perspective, what is the strength, weakness, opportunity, and the threat when it comes to financing of a carbon project? So the strength that has is that it has the unrivaled rural network. So we have the largest balance sheet when it comes to any developmental financial institution. We have the network to go with it. We have the FPOs, the self-help groups, and the roots of NABARD are the deepest when it comes to the rural region of India. Then there is the dedicated climate infrastructure that we have here. So it counts the capacity we have. We have been the dedicated agency through which GCF and AF funds have been flowing in the country. So there is a culture of what we can say utilization of climate financing that we have, and this is certainly something we can leverage moving on. So we also have the strong network with the global and the national players. Just for example, we have partnered with Food and Agriculture Organization, and we are hoping to organize the whole carbon developer space in India in such a way that they are able to get in contact with the buyers and secure some offtake agreements as well. Then what are the weaknesses that we can surely work on is that there is a high transaction cost when it comes to Indian agriculture, especially. So this is majorly due to the smaller and marginal land holding that the farmers here possess. Apart from that, NABARD as a whole has been historically a risk-averse sort of bank. So we have taken the projects which are very much towards what a small institution would do, but we are doing it for the larger good of the marginalized community. Apart from that, there is the need of capacity building and the literacy constraints that the society has. Then talking about the opportunities, so recently the Indian carbon credit trading scheme has been announced by the government of India, which is going to help in development of the domestic methodologies as well as the domestic market for the carbon space. Then there is the untapped sector. So we definitely have a first movers advantage when it comes to financing the carbon projects. And the achievement of mandate set out for the NABARD by the government of India is one such opportunity for us as well. When talking about the threats that financing carbon project can pose for the bank, is that the interest servicing. So there is a long lag period when it comes to the uh, development of a revenue stream. So in this time, there is no way of monetizing the carbon or the carbon assets for providing the interest repayment. For this, we have again come up with a novel solution of providing collateral in form of the future carbon credits. Apart from that, we are also going to be providing the interest during construction sort of financial instrument through which the carbon project developer can put the interest obligation in a future date. And also there is the provision for moratorium within our term loan as well for up to 4 years, which is quite significant when we take into account the other options that the carbon developers have. Then the threat is obviously going to be the dependence that Indian agriculture has on the monsoon and the climate vulnerability that we are facing right now. Just taking the example, today was supposed to be one of the wettest days in Mumbai, where I'm sitting right now. However, the sun is out, there are no clouds to be seen. And this is the typical example of what we have to expect when there is talks of the climate change and everything. The super El Nino being one of the culprits for this dissidence of the monsoon in India. So that is particularly a threat as it affects the overall life cycle of a agroforestry project or say forestry project as well. Lastly, there is the threat of over dependence on the international markets and the uncertainty that the market as a whole, let it be international or domestic, faces right now. So the core takeaway from what we have seen as an institution for providing benefits to the carbon project developers is that credible high impact climate mitigation can only succeed when the technical rigor of the global carbon standards is fully integrated with the ground level economic realities of local communities. So thank you for your time.
Thank you so much, Aftad. And now I want to give the floor to our last panelist, Mr. Vamsi Krishna, the CEO and Managing Director from Kosher Climate, who's also going to present hands-on experience in designing and implementing carbon projects. Thank you so much.
Hi, good morning and good afternoon, everybody. Thanks, Jimena, for, of course, first making it happen. And I am not able to share it here. My colleague Shruti is just trying to. Yes, I think oh, yes, the presentation is still on. Yeah, maybe now.
We can see it.
Are you doing it?
Yes.
Yeah, I can see, yes. Yes, thank you very much. We go to the next page. So Today, I'm going to talk about alternative wetting and drying in paddy fields. So this is about one of the projects. We have done multiple projects in AWD in India, in Cambodia, and in Laos. So today I would talk about the Indian project, which is done in West Bengal. First of all, just to kickstart with what is AWD? AWD, as the name suggests, it's alternative wetting and drying. Paddy as a crop is one of the major crops grown in India. About close to 45 to 50 million hectares annually is utilized to grow paddy, and is also one of the major sources of methane emissions, mainly due to the flooding of fields. This practice of flooding of fields is age old, and the reason is that paddy grows into marshy lands. However, it's not necessary. IRI, as a scientific body from the Philippines, and of course worldwide they are present, they have been from many years, from many decades, trying to work on saving water and methane within the agriculture space itself. And they had come up with certain guidelines, which was eventually developed as AWD. These guidelines were focused on reducing the usage of water and also reducing the emission of methane. Now, in India, majority of the times when water is available, all the farmers keep their fields flooded. In those conditions, what happens is, because of the organic nature of the manure or the soil itself, a lot of anaerobic conditions are developed and a lot of methane is emitted. About per hectare of land, depending upon the conditions of the soil itself, about 200 to 900 kg of methane is emitted annually in 2 seasons. And by adopting the method where you are not flooding, now this is what AWD is mainly. Now, where you are not flooding, you are not keeping the complete field flooded all the time, but you let the water drain for a few days and then flood again. You can reduce methane emission by a lot, about 40 to 50%. Now, what that does is that saves about, say, 300 to 500 kg of methane. And if the practice is done well, in 2 to 3 seasons, depending upon, like in Vietnam and in Laos and Cambodia, some regions have 3 seasons also. You can save between 4 to 7 or 8 tons of CO2 equivalent every year. Uh, the principles are very simple, that you have to dry the fields in between at least 2 times or more than 2 times per season. That is what AWD is. They and the methodology followed is also, I would say, in many ways like very old methodology, based on which the new methodologies are developed as well, which is AMS3AU. This methodology talks about how to monitor the whole process in it. Now it guides the project proponent to develop a pipe. I would try to wrap up as early as possible. I know we are restricted on time, but I just covered this AWD part first quickly. What you do is basically you take a porous pipe, you have like holes in it, it's 30 centimeter, and you make sure that it goes about 20 centimeter in the soil and then 10 centimeters above it. With that, what we enable the farmer to do is the farmer is able to see the water level. The roots of different varieties of paddy grows to different length. And if the specific paddy variety which is being cultivated has more than 15 centimeter of length, we encourage the farmers to do the drying until 15 centimeter below the soil level. Like let the water go in the pipe about 15 centimeter. And if the root length is not that much, only about 10 centimeter, we ask them to take it around 10 centimeters so that the productivity of the yield is not impacted. So this is what AWD is, and we move on to the next page. Implementation, I mean, we have about onboarded more than 50,000 hectares of paddy field in India. And we have already completed the validation, registration, verification, and issuance under gold standard for one of the Andhra Pradesh project. In fact, this was the first project in India. This was the first project worldwide to submit for review. And there was another small project which had issued before us. And then ours was the second project under gold standard to issue carbon credit GSVRs under the methodology. And then we have, apart from the Andhra project, we have now currently about 5 EPS ongoing under issuance in the West Bengal region. Uh, when we started off the process, it was extremely challenging. A simple process that we followed was first to do a pilot and also to understand the region itself. If I have to go on how do you implement a project, I mean, it's super important would be the region itself. A region where stakeholder engagement is possible, because not all the regions are very similar in nature. Uh, you should be able to have the right FPO's partner, and then stakeholder engagement should be easy enough. And then also, the implementation of paddy has to be continuous, where you can like work with, say, communities together as one unit and then implement the project. That is the most important factor for the implementation of project. We have come across regions as well where paddy is not continuous, like it's only a few hectares per village. That becomes very tricky, particularly for drying and also particularly for farmer engagement itself. And then, of course, you go and identify the right ground partner, you do the training sessions and everything, make sure that everybody's aware. And after that, the whole process of technology comes into play, where there are multiple things that we do. One is, of course, we had established a lab as well, which I will cover in the uh, later slides. And then also satellite monitoring. And then as well, we have to implement pipe in every field. And then we also have an application. The application is used to take photograph of the drawing itself. And the application, what happens is when you take the phone and you take a photograph in a particular field, if that particular field is onboarded, it geotags itself. We go to the next slide. This is about the verification, where we are using satellite images. And so um, monitoring is a super important part. We just go back now. Monitoring is also a super important part of the whole process itself, because now uh, every buyer is questioning the credibility of the crates itself. And the boards are also trying to evolve as per the changing ecosystems. What we have done for our project is we had engaged a third party where the satellite monitoring was done. With respect to the satellite monitoring, we also had on-ground sensors installed, and the sensors like were giving the data with respect to where the water level is reaching. The satellite images were calibrated for that, and then the whole area we could identify what is a drying level. This was one method. Then, of course, we had our own lab. We set up a lab in Kolkata, near Kolkata. And what we did is we took sample, the methane collection. We collected methane from the fields itself, and we took it to the labs and also tested it. And the results were very similar to what the defaults were, about 20% higher though. So we had those tests also done, where we had methane collected in the control sites, and then we collected methane in our project sites and compared. And we realized that yes, the saving of about 7 to 8 ton per hectare per year was happening. We go to the next. This is just an example of when we are like onboarding a farmer. If you see those green color boxes, each box is a farmer or a plot, a polygon. We go, our FPO or our teams go and like meet the farmer, the local community, ask them to come on board with us and become part of the project. Then the farmer, of course, we take a photograph of the farmer, the land documents are recorded, their identity is recorded, and then their land is also identified with survey numbers and everything. And after that, a team goes and specifically makes a polygon of their land. And then in the app itself, if when you click on the polygon, the whole details of the farmer comes, the identity and all of those things, and then the photograph of when the pipe is installed. And after that, the next photograph is when the next first drying is done. Then the next photograph is when the second drying is done. So there are photographic evidences of each and every polygon on how we have done the whole process. This app was developed by ourselves. It's an in-house monitoring app that we have. We can go to the next one. So challenges that we faced, a number of challenges. In fact, one of the most important challenges to take the farmers in confidence, because farmers have a number of questions. One of the biggest thing is what will be the impact on the yield if we do drying, because they are worried that the roots of the paddy species is not deep enough, and if there is a drying, they may like face losses or something like that. That is one of the biggest challenges that we have. And then, of course, the farmer also sometimes see that the monetary reward for doing the process itself is not very high. So that's one level of discouragement for any farmer who would not, who's very conventional. What we have though seen is like younger farmers usually are more risk. They're happy to take the risk. However, we do face some challenges when the farmers are very conventional or the last generation farmers. So that is one of the things. And then, of course, a lot of time what happens is if the whole process is delayed, and then, say, for instance, we are expecting the issuance to happen by the third season, and it doesn't happen, and the farmer does not receive the funds which are expected from the sale of carbon credits, there is a possibility that the farmer may drop out. That is another challenge, but we do consider it. We have experienced the dropout to be about 7 to 10% for the projects that we have done. We go to the next one. Yes, some of the challenges that we have faced technically, I see some of one, apart from what is covered, like one of the key challenges technology wise is the app itself and also the implementation of app. The Indian farmers are not very tech savvy. Initially, we thought that we will have all the farmers download the app and then they would use the app and go and take photographs of the drying events itself, which wasn't possible because the app sometimes take a little bit of time to upload. And if the location is not right, because I was mentioning, right, if you go to the polygon and you open it, it geotags itself to the polygon. Okay, this is the right polygon, polygon number 386, say for instance. It will take photograph, but it may lock to a wrong polygon as well. That is to be verified sometimes. So such challenges we had faced, and then we tried to increase the accuracy and made the app as hassle-free as possible. And then, of course, while doing the polygon itself, it's likely that the polygon may move like a meter or two here and there. All of those things have to be corrected. It's quite an work, because if the polygons are not done well, it may take a couple of months work to correct it. We go on to the next one. So if any challenges or any corrections that could be done in the next pilot, one of the things that we have learned from India, because we did extensively work here, and as I mentioned, we have covered more than 50,000 hectares, out of which now I think 18,000 hectare is under 18 or 19,000 hectare is under issuance. And apart from that, another 7,000 hectares already issued. So we have done a lot of work here. We set up our lab also. We got the equipment, everything imported. But now we also were going very fast as well. So when we started our project off in Cambodia and Laos, one of the things that we did, because we knew that the whole geography is different, so we started off with pilots. Both the regions have two projects, Cambodia and Laos, and which are less than 1,000 hectare at this point of time. And in both the places, we did develop two different applications again, mobile applications. And then, of course, we first resolved all the issue. So, and first the challenges also, because in particularly in Laos and Cambodia is a little bit different. Cambodia is a continuous irrigation system, where if you open the channel, these parcel of 50 or 100 hectare connected plots are all either flooded or all either dried. So working with the local authorities and the local village authorities is also extremely important, so that these events can be planned when the water is being distributed. And then in Laos, if you see, the challenges are something else. Like language is one of the biggest challenge in Laos, and it becomes difficult for the local municipality people or everybody, also difficult to engage with the farmers. Some farmers communities are extremely disconnected overall. We can go on to the next one. Yeah, as I was saying, one of the biggest challenge, particularly for engagement of buyers, is how credible the credits are. How do, in case of some of the other technologies, say for instance, it is renewable energy carbon credits, it's very straightforward to say that these are the emission reductions that we are claiming, and this is a straightforward way of calculation. However, that's not the same case when it comes to projects where there is SOC involved, methane avoidance in paddy field is involved, right? Because this is following a default which is suggested by the methodology. And then comes the events of drying itself, and then comes the soil condition itself. Some of these things are not in place yet with respect to we were also exploring some of the other factors, like what is actually impacting the methane when we had our lab. So the text or the guidance also says that the organic content or utilization of organic manure does increases methane, and that is all the case that we realized as well. So there is no guarantee or assurance that these defaults are about 80% or 90% accurate. It may be like 70% accurate. So that is one thing, and that is why deployment of MRV, at least to the scale possible, to the maximum scale possible, is important as well, because it is beyond the control of the project proponent, where a digital monitoring process is given to a third party. Now the boards are adopting it, saying that we have accredited a DMRV service provider and we are approving this process, and you do this process itself. So that is where possibly the whole market is also moving towards a, a more credible kind of verification process. We go to the next one. Am I taking? Okay. So, and then of course, de-risking, I would say to de-risk the process, there are only two things which are extremely important for any investor or public development banks as well. The first and foremost is the success of a pilot. There has to be a pilot, and which has to be implemented successfully within the timeline, and then the risks are identified. And that basically helps to, while you are sizing up, it helps to make sure that those things are taken care of. The other thing is engagement with buyers at an early stage, getting the DMRV or the process approved. These two things critically solves majority of the problems. Pilot ensures all technical problems are solved. And then, of course, on the sales side, engagement, or at least discussions, like you might have seen, Amazon has signed a good deal of AWD credits now. Something like that possibly solves all this one. We can go to the next. No, we can. A revenue sharing model. Yeah. This revenue sharing model is extremely important as well. However, this is more from a perspective that farmers are getting benefited rather than the benefit itself. At this point of time, while we are presenting the projects to an investor, investors are interested in the returns, and when that is happening, we the investor at least requires 50% of the share. On our projects currently that we are doing, we are promising at least a 40% around share for the farmers themselves, where depending upon the price, they receive certain benefits. But uh, practically, the remuneration or the benefit itself is not good enough. Even if you calculate from like 6 credits per hectare, and even if it is a $15, you're like receiving $90, and then the farmer possibly will receive less than $40, or maybe $30 to $40, which is not significant enough, because the average land holding size is not even a hectare. So you can expect the farmer, a typical farmer in West Bengal, within our, we have like 50,000 hectare onboarded. It would be totally, I believe it would be about 80, 90,000 farmers. So you can like estimate, like it's a less than a hectare ownership. So per farmer receipt of money is very, very less. Yes, we go on to the next one. We could go on, we can skip the next one. Yeah, yeah, more or less that is all about the project that we have done. We are at the issuance stage currently, and we are expecting the issuance from this project very soon. And this is basically a Laos project where we had a government MOU, and we had MOU with the Department of Agriculture and some of the other departments. Some photographs. This photograph is of one farmer implementing the pipe at the initial stage. So we are expecting issuance from all of these projects. The second, which is the second phase, and we are engaging with the consumers as well. So that is all from me.
Thank you so much as well for sharing your experience from Kosher Climate. So I want to thank as well all the different participants and panelists for today. I want to open the floor if we have any questions. I know there's some questions in the chat, but if there's anyone who would like to raise their hands and ask some questions to our panelists, please go ahead. If not, I think we'll just read the ones in the chat and yes. Let's see.
Mrs. Tina, I have already allowed you to talk. If you want to raise the questions and open the mic, please.
Okay, thank you. So my name is Tina Hovio and I call from Finland. We have been supporting carbon projects and smallholder-driven carbon projects, and it was interesting. The challenges sound very familiar. I'd like to ask the panelists, what do you estimate as a kind of upfront finance needed if you start building up a project which is targeting smallholders? Let's say something like 10,000 hectares, and how long should the initial financing kind of stay so that you're not taking too many risks? Thank you.
Mina, would you like me to answer? Hi,
Yes,
Dina, this
please.
is Vamsi. If you're looking at looking to engage with small scale farmers, again, geography to geography, there will be like multiple challenges, and the learnings are usually very different. Your question with respect to how do you start and what should be the size, I would say a size of around 200 hectares to 1,000 hectares is a good representation and should be able to give like the right ideas and give you the right exposure of all elements on ground. Challenges with respect to soil, farmer, bureaucracy, or the in general system on ground itself. Uh, that's a decent enough size. And then, of course, if you're doing that and you're taking ahead the whole process under carbon as well, that would still make sense. And eventually, once you have successfully completed that process, set up your own DMRV or set up your own MRV process, physical one, uh, after that, you can take it to the carbon process as well parallelly. Because 1,000 hectare would still make some sense. You may get about 5 to 6,000 credits in an AWD project. In SOC, you may get 2 to 3,000 credits per year. So that is a decent size, still a decent size where you can think about that. Yes, okay, this is investable. And then once it is done, gold standard does allow you to add a larger area for the next verifications. Now, once you have made the project successful already in the first go, and you have, say, 1,000 hectares, you can go for the 9,000 hectare, or depending upon the size or limitation, because there is a small scale limitation also. Depending upon that, you can, like in the coming season, onboard more farmers, engage on ground with FPOs, and make it a full size project after making it a success. So typically, depending upon your agenda, if you want credits, maybe 1,000. If you just want a success, technically 200 hectares, 200 to 1,000 hectares should be ideally good.
Thank you for answering this question. And I saw another question in the Q&A by Mr. Kojovi. If you want to open your mic and speak, otherwise I can also read the question for you.
My question is very simple, okay? I want to know the main challenge in MRV, carbon sequestration in smallholder farming systems. What is the main challenge by your experience? Thank you. Can you hear me, please?
Yes, we can. Thank you for the
Yes.
question. I don't know who from the panelists would like to answer.
Should I answer? Yeah.
Please feel
Thank you for
free.
your question. The most important challenge with MRV is setting up the system, one, thinking through the process on what is the most ideal process. At this point of time, the methodology has certain requirement. The methodology requirement are always not a guidance on exactly how to do things. As an example, when AMS3AU was released, it was a different era altogether. And the same requirements have been passed on in the eventual methodologies as well. What it requires you is it requires you to just record whether drying has happened or not. It does not provide any guidance on how to do it. So designing the MRV itself is the first challenge. Like, how do you make it robust enough where someone looking at it would like trust the process? And apart from that, implementation. As an example, just because we have decided that as soon as the drying is happening, right? I'm just giving an example of a AWD project that we are doing. The drying process is happening only for 3 or 4 days. Now we have to record it. We have to monitor that whether the drying has happened or not. And it is only a very short window where the drying is happening. Making the ground team or the whole ecosystem move that within that time, so many photographs have to be taken, thousands, tens of thousands sometimes, and reaching to every plot, asking every farmer to record it in time, within time, before the next flooding happens, before you flood it the next time. That also becomes a challenge. So the on-ground collection of data at the right time becomes a huge challenge. That is where a lot of time the system fails. You would want 10,000 hectare photographs of drying to be updated, which would be, I would say, 20,000 or 30,000 photographs. And if is it possible to take those in like 3 or 4 days window? Not sure. Of course, it doesn't happen exactly like that. There are different parcels, but still that is one of the biggest challenge in planning it, the planning a robust MRV, and then implementation and getting the data into the system itself.
Thank you so much for answering this question. Alam, I saw you answer another question about the MRV in the chat. Do you want to add some points?
No, I think I have given all the explanation. For me, simply when you deal with farmers, and especially small farmers, the big issue is transaction cost, because we are in a compensation system, and so it should be extremely rigorous about how much carbon is stored, etc., etc. And for me, clearly the carbon is not adapted for smallholders. And as I put in the chat, I think in a PES system, payment for environmental services system, based on practices, and I would like to insist on this point. I think since you want to, in as much you want to have some sharp carbon measurement, you are going to explode your transaction costs, especially with smallholders. And probably the better system is to pay people as long as they adopt or keep some virtuous practices. And this is a PES programs, PES system that can be funded partly by carbon credits, by carbon revenues, but assessed as at jurisdictional level or assessed at territorial level in order to reduce transaction costs. But if you want to do it on individual plots, I think it will be really unfeasible.
Thank you. Thank you for the answer. There's one last question from Tosin. If you want to talk, please. Otherwise, we'll be lagging behind from the schedule.
All right. So thanks. Thanks. My
Please.
question is very simple. And thanks to all the sort of presenters. It's been a very informative session. So at the pre-credit issuance of carbon credits, one of the things I've heard is that it's always advisable to engage with investors. So in negotiating the financing agreements for carbon credits, which is called the VEPA, the Verified Emissions Reduction Purchase Agreement. I was just trying to understand what are the key challenges that they might have faced when negotiating that forward agreement with prospective investors.
Should I answer?
Thank you.
Mr. Tosin, thank you for the question. See, one of the biggest challenges when it comes to forward agreements is the time itself. majority of the challenges is alignment with respect to what is the timeline expected for the project and what is the timeline expected for a deal to close. The due diligences, which is followed by large consumers, are very robust. And as an example, some of the discussions that currently are happening for like over 1 year, 1.5 year. And these discussions are continuously happening, and it keeps on going. And some deals close in 6 to 8 months as well. So I think timeline is one of the biggest challenge. And then, of course, identifying the right consumers as well. The consumers must also have like a specific demand that yes, they have like a deadline to meet. If they do not have a deadline to meet internally, then it becomes a big challenge for us as project developers to convince them to have like a deadline to resolve the due diligence process also. And that is where majority, I think, of the majority of the project developers and everybody face challenges is with the timeline. And then, of course, also like with respect to what kind of agreements are there. If it's an open-ended, a lot of times we have faced this also, that even if there is a forward agreement possible, conditional ones, those are not good enough for us to go ahead with. Say, for instance, we take that to a debt, to secure debt, or even if we take it to NABARD, like just now we were having that conversation. So even if we do that, possibly if it is a conditional forward agreement, it will not be entertained. And Aftab was mentioning that there is NABARD also wants to fund, and possibly some of the important thing will be to have a forward agreement, but they will not be able to fund it until and unless those are non-conditional and watertight agreements. So these are the couple of things: one, due diligence, the time taken, and then the agreement itself. Sometimes the buyer comes up with term sheet which is conditional in nature.
Thank you. Thank you so much for answering these questions from your rich experience. And now I'll pass the floor to Himi to close this webinar. And thank you everyone for staying for this long.
Unless maybe one of the other speaker would have something to add also to the discussion, but indeed the discussion has been very rich, and thank you everybody. And we've been very happy to have participants from all the different continents, from South Africa to Mexico, from Bhutan to Nigeria. So it has been very informative. So thanks a lot, everyone. So I don't know if Ivan or Gauthier, if some of you would like to have a last word before we conclude, before we give the floor to Jimena for conclusion. So Jimena, please.
Yes, thank you so much, Thierry. No, and thank you everyone for participating. Thank you so much to our panelists, which are very knowledgeable, and we managed to cover different aspects on the carbon markets, the projects, the different challenges, and we hope that we can also continue working on this, and then other PDBs can also start working on carbon credits, despite it being a bit complex and solutions still need to be found for certain things. But we will also be sharing the different materials from the panelists. And if you have any additional questions, you can also contact us in the secretariat, and we will happily liaise with the panelists. But thank you so much, and have a great day and weekend.
Thank you, everybody.
Thank you so
Thank you.
much.